I'll start by moving back a bit in my career. This is 1995. I had been hired by JP Morgan a few years back, just out of college, McGill. And I'm sitting on the desk in New York, and Netscape is IPOing. The Netscape IPO, which is the first browser that was IPO'd, was supposed to be at $14. It came out at $28, which was doubling the price that I had estimated. On that very same day, the stock was up more than 100%. This might sound natural to you or normal, but in 1995, this was the first one. There's another very peculiar thing about Netscape, or that IPO, was that it was an IPO of a company that had no profits. And this, for the capital markets, was new. And of course, as the time went by, IPOs of non-profitable companies became almost a routine up to 2000, when the whole thing came crumbling down. Now, Netscape had a very interesting feature. It had SSL. SSL is a protocol, security protocol that actually enabled credit cards, supposedly secure credit card transactions. So in 1996, I was hired back to Brazil to run an equity trading desk. And aside from trading, I was, 97 actually, I was buying books on Amazon. And you could do it, why? Because Netscape had been invented, and you could transact in the internet using credit cards somewhat safely, actually fairly safely. So this is Fintech. I mean, Fintech has been around for a long, long time, much before Netscape actually, because ever since banks started using IBM mainframes and what have you, Fintech has been around. What has happened over the years is that technology has become such a prevalent feature of every single economic activity that you have had cross-pollination in terms of technology. And my basic hypothesis when it comes to Fintech is that the Fintech world is not so much a threat to the banks, is what drives competition among banks or among insurance companies, among financial service providers. And I hope to demonstrate that in this presentation. I'll start with a very, very simple context slide, which brings, I think, one of the most important points in the financial services industry in terms of understanding how it works and what the barriers to entry are. This is a regulated sector. It is a regulated sector with more regulation as the days go by. So it's very difficult to break in. At the same time, the existing players are enormous. So that, as Angelos, for example, mentioned yesterday, makes life even harder for Fintech. The second point in my slide is the one I just made. You know, it is banks competing against banks using technology, because they realize that the adoption of technology is a great, the adoption of the right technology might be a great competitive advantage. So if you're missing out on something, you'll stay behind, you lose market share, you make less money, and so on and so forth. Connectivity is a given, right? I mean, we are more and more connected everywhere, and that's a fact of life. If you don't address that, you'll stay behind. And then there's the generational thing, this, this cliche you have heard many, many times. Everybody wants to be served like Amazon or like eBay or what have you. It's a different customer service experience. So this is more or less the context. An additional point is that it's also important to understand that banking, especially commercial banking, is a local thing. It's a country thing. So when you look at the Fintech space, or what we're calling Fintech, what has emerged as Fintech, you search, for example, Thailand Fintech. You'll see that very same slide you see for Berlin or for New York or for London, 50 Fintech companies in Thailand, or Indonesia or Vietnam or Brazil or whatever. So the fact that it's a local industry also automatically fosters a local Fintech scene, which is financed in great part by the banks themselves. Because as I said, the banks see that as a competitive edge, the adoption of new technologies or new ways of doing things as a competitive edge, much more than being challengers to the established order. But we'll come to that in a bit more detail. Just to put it in perspective, we're talking about almost 5 trillion in revenues for financial services across the world. And this Goldman report from last year is saying that fintech will try to grab part of this 5 trillion. Yes, it has been trying to do that, but with limited success. Actually, technology, the objective of technology is to make this pie smaller, not bigger. Why? Reduce costs, make it simpler, make it easier, and so on and so forth. So this is a bit of countersensical idea, but technology should make this number smaller. Unless you talk about penetration, yes, penetration is increasing, but the increasing penetration is not at the margin very profitable because it's going to people with very low incomes and so on and so forth, but that's a different story altogether. And then there's the budget, 500 billion spent in TI by banks. But banks have been spending a lot of money in IT, sorry, TI is in Portuguese, for a long, long time. People that have been in banks know what a mess they are, how much money they need to spend just to sort out basic problems. So there's nothing new. Huge amounts of money and huge problems across the board. If you think about a problem, a bank has it. So there's a great opportunity to help the bank solve those problems as well. Well, what has been happening with established players? They've been approaching this technology issue in a number of ways. M&A, just acquisitions. There are some examples here. I chose Honest Dollar because I like the name. I found Honest Dollar, I found it a bit funny, but still, they've been buying lots of things, which is, they buy, they flip it in. Often, this has happened in the past. They buy a company, it disappears in the middle of this huge sea of financial mess that these companies tend to be. I think we have an idea that they work really well, but it's not like that, and they know it. I mean, they'll tell you in any case. Banks doing VC, Barclays was financing an incubator. They are changing their strategy. I don't think it really works very well. Cooperation, I think, is the name of the game. And that's what we're seeing more and more and more. And it goes into that direction that fintechs will come with something which is more efficient, lighter, more customer-friendly, but they lack distribution, they lack capital. They partner up with a bank. The bank also has something which they can flip into, they can transform into that thing, make it much bigger. And so, the city with Lending Club, Banque Nationale du Canada, and there are other partners as well. And also banks have established their own virtual banks, online presence with different degrees of success. The case of Italy, they have had great success. There's an issue of how you account for costs in something like that, but in any case, this natural attempts. Then, if we go back to the previous point of unbundling banks. Unbundling banks essentially means, I'll look at a commercial bank or even investment bank. What does it do well? What it doesn't do well? Can I do it instead of it? Can I do it successfully? As I mentioned, regulation is a major barrier. Technology is for the fintech. The fintech can do it cheaper. We'll see in the next slide when we talk about Lending Club, how they sell their competitive advantage, and service, which goes with the technology to a certain extent. It's people that understand what the new demand is, what people want to see. It's actually the difference between this presentation and a presentation done by tech startups here, which is much nicer pictures and so on and so forth. This is a typical financial presentation. So just to give you an update of what has been happening in the fintech world recently, the green color, if you can see it well, it's lending. Lending, peer-to-peer, or lending has been the trend most recently. Now, when you look at this, what does it tell you? It tells you that the capital markets are going this way. Does it tell you that the whole industry is going this way? No. This industry is huge, but it's absolutely enormous. This is one of the trends, an important trend perhaps, But it doesn't mean that this is the direction of fintech. It means that that's where the funding in the short run has been. That's where people are betting in the short term. In no way a guarantee of success, naturally. And then there are all the other examples, the other verticals you have: insurance, wealth management, blockchain, and so on and so forth. But what is hot is lending and peer-to-peer lending. Lu.com is a Chinese company, and the Chinese have been going big into this peer-to-peer lending and lending in general, online lending. This is Lending Club. So Lending Club, it began actually as a Facebook group, where the idea was that if you have common interests, the propensity to default that loan was low, because if you're in a biking club, you could lend to someone in the same biking club, and you know each other, you had the same interests. When it IPO'd, it was nothing like that. It had become a different company, which is very usual, right? I mean, when companies go to funding stages, they're refining their business models, they change it all the time. So Lending Club launched as this, the right-hand side of the slide shows, which is, you needed a loan, you sign up, you describe what you do, you describe who you are a little bit. They have the algorithms that credit score you. And on the other side, investors would come, look at what's available, and lend the money. So it looks like a good idea, but the execution is fairly problematic. And there are a number of reasons for that. I'm talking with the benefit of hindsight, because we have seen the problems after that. First of all, people would, for example, choose the higher yielding loans. Is that a good idea? Because people, they would look at the list and say, well, I'll give you the higher yielding loans because the risk is more or less the same, but it's not. Then the other thing is that the company itself lacked the processes to do proper due diligence. Due diligence in banks is something serious, costly, difficult to do, and so on and so forth. Lending Club was not doing it properly. They changed it. So it's also a company that continues to change its business model. However, from a fintech standpoint, from a challenge standpoint, the important thing is what's on the other side of the slide, which is they are able to do things faster, cheaper, better than the existing operating bank or financial company. And this is what the banks looked at and said, well, this is what we should do. However, as these companies grow, the demands they have become similar to banks, so they become banks. So this is, if you have success, you become like a bank. You become like a bank, you become regulated, you have many more things to do that you had to do before. So it's a complicated space to just say, well, I have a good idea, you grow, you implement it. Regulated sectors are very different from the rest when it comes to innovation and entrepreneurship. So this is what happened to Lending Club. Lending Club IPO'd at around 25, and now it's 6. And Lending Club now, with partnership, is doing better. It's doing much, much better. The costs have gone higher, it's a model that actually, the technology makes sense, but the business case on a standalone basis is more difficult to sustain. You have had, given the US has this breadth of experience, you have had peer-to-peer lending outfits where the company puts capital on it. So it has skin in the game. And this has different results. So some people argue that there should be this hybrid model, where you have capital. Others say, P2P, pure P2P might work. And others think, no, just you fully finance it. But then it's not anymore P2P. It's a bank, right? So this is, when you come to think of it, this is like banks were before. This is proto-bank. So you go from proto-bank to proto-bank to bank again. Difficult to break this in this particular case. So Lending Club, again, is an example of a good idea where execution is a big problem. Now, we've been discussing fintech. We've been discussing the fact that fintech actually has been applied in banks from the very beginning, when financial companies realized that they need to have systems, that they need to have processes, and so on and so forth. But where are we? How advanced is this whole thing? And we're still in my belief that we're still in the very, very beginning of this whole process. And here there is an example of something this is a World Bank data for the world. This is the number of ATMs per 100,000 people in the world. And it's been growing a lot. You say, well, so they give you a card, it has a password, and you go in a machine and take paper money out. This doesn't seem like you're going to a more efficient world. It seems like, say, paper money. Well, why? Because this is emerging markets. In the developed markets, ATMs are not going up. They're going down. The cost of running an ATM is enormous. You have to maintain the machine itself. You have to bring the cash in, and so on and so forth. ATMs will disappear. I'm absolutely convinced, because I believe in cashless society. So you don't need ATMs in the future. But ATMs are still growing. You have, there's a great demand for ATMs, especially in countries where there's lots of remittances coming in, like India. The State Bank of India has 13,000 branches. It's huge. I'm not sure they'll have that many branches in the future, but as of today, that's where we are. So technology still has a long, long way to go in terms of cutting costs out of, for example, this feature. Again, this is branches. As I mentioned, the example of the State Bank of India, this is number of branches growing, again, across the world, World Bank data. And here, this is US. These are people employed in the financial system. So you see, after the 2008 crisis, employment came down substantially. And employment came down substantially and has recovered. One would expect that, after crisis, companies have become much leaner. In part, employment also came back because rates are very, very low. So, there's so much lending going on and so much more activity because of very low rates. But, employment will probably come down in the financial system over time. Looking further into the future, as I mentioned, I think we're still in the beginning. This is a sector that will still see a lot of change. I think we are really in the beginning. RegTech, which is not the most sexy part of fintech, is very, very important, because RegTech means essentially that banks will automatize processes that are currently very manual, very time-consuming, very bureaucratic, and this will, over time, become much, much simpler. InsurTech, insurance, is also an area with great potential that you don't see much about. It's, insurance industry is actually not as aggressive as banks in the adoption of technology in general, and this will change because the fintechs will address it. In wealth management, I think it's another area where things have been changing quite a lot. We look at Betterment, for example, as an example, and then there are many competitors to Betterment. But I think in wealth is not this thing which will really make a difference. It's much more the applications to portfolio management, to very specific use of technology for generating excess returns in funds. It's different, it's a complicated issue. In M&A, which the banks will definitely continue doing, the applications on analyzing big data will be very important. I mean, banks are consumer companies. They need to understand the behavior of their clients to have better service, offer them more products, and so on and so forth. RegTech, as I mentioned, security is absolutely key. And I think banks will also acquire online banks just because they can also, as I said, flip in their own operations in a much leaner structure. staffing will come down and real estate will be much less used. I think that's essentially a given, in my opinion. We've seen that in a few countries already. In Brazil, for example, it's very clear that one of the leading banks, for example, has now a building where it's a virtual bank division, and the managers are sitting, they have 24-hour service. You can use Skype, you can use WhatsApp, you can use anything. So it's a different type of bank manager or staff, which also means that you have to train your workforce in a different manner. And we always go back to regulation. The local regulator is very important. Even in Europe, we still have 28 or 27 soon, I don't know, regulators, right? And they, even if they're under the ESMA, they have their own peculiarities. And then the rest of the world is always a little bit different here and there. And so the industry will evolve a little bit different here and there. And finally, last but not least, the major internet players. I mean, Google, it's Apple, perhaps Amazon. These, they seem to have, we can't really, I can't really tell very well, but it seems like it's scaled back a bit, but they'll be providers, at the minimum, they'll be providers of very, very significant technologies for the financial industries. Whether they'll be direct competitors, it's a good question, probably not, as it looks now, but that can change. So, this is, I think, the major takes in my mind. This is an industry in major, major change, but it doesn't happen quickly. It will take quite some time, but it will look very, very different in 10 years, 20 years. It will be very, very, very different if all of what I expect to happen happens.
Yes, thank you very much, Paulo. Do we have any questions? Sodrius.
Hey, so do you see all these banking apps, like mobile banking apps turning into banks in the long or medium term? When you talked about these cycles, do you think they'll grow into banks and then the same thing will happen, or?
It's a very good question, but probably not. I think, to put a bank together is extremely complicated. I think those apps that have really a meaningful presence on the back end, yes, definitely. But those that are more, there's less substance, I don't think so. No. So.
Angelos?
Hi, Paulo. What about when you say the major internet players? You mentioned Apple, you mentioned Google. I think Facebook could potentially be a very major internet player, particularly through the Messenger service. And specifically, we have a friend of ours, a friend of the Cypriot Enterprise Link, who is building a chatbot through Facebook, an intelligent saver, if you like. And using algorithms, it sort of automatically saves you money through Facebook Messenger. Is that a flash in the pan, or do you see personalized banking through Messenger applications being something of a trend in the future?
No, I think this, like Plum, for example, right?
That's actually the one we're talking about.
I think Plum is a great idea, but these are add-ons. These are not, just relatively small, important ideas. You'll see them more and more. Some of them make a great deal of sense. Many of them don't. But yes, this will be part of, financial education is a huge subject. Banking is such an important thing, and the level of financial education is absolutely amazingly low, which is even scary. So these kind of things will be very helpful. It will depend on how, on the adoption of them, but these are absolutely important initiatives on various fronts. On the financial front, but also, making people take better care of themselves when it comes to their own situation.
Hi, Paulo. Thank you very much. I think you said that cooperation in the fintech industry is the name of the game.
I think so, yes.
Yeah. Do you mind elaborating a little bit more about this, please?
Yes, sure. I guess I spoke very fast about many things, but yeah. but yes, yes, yes.
Often the way we play the game.
Yes. Sure, sure. You know, I think that given that fintechs are faced with enormous challenges to grow because of regulatory barriers and needs of capital needs, because they don't have a distribution channel, even if they go on the internet, it's expensive to acquire new clients. And the banks at the same time, they see these new models as being more efficient. It makes a lot of sense to combine it. The banks can provide clients, it can provide the back end on the regulatory side, on the KYC side, on numerous fronts. And these companies can take care of the customer experience, and perhaps they can also have better technology in terms of loan origination or pricing credit and so on and so forth. So that's where the argument comes together.
Thank you very much, Paulo.
Thank you.
One last question, because our time is up.
Hi, Paulo.
Hello.
So my question would be about fiduciary services. We have recently seen that because many international startups want to open up in Delaware and other locations, mainly register in Delaware in the US and register a company there, we have seen the introduction of services such as Stripe Atlas, which pretty much helps you through their payment services in cooperation with a bank and PwC, etc., to establish fiduciary services through the fintech. I would just like a quick comment. Where do you see the future of that? Thank you.
I think these things are, you see them happening more and more and more. All these processes that have been very cumbersome, very lengthy, very complicated, they are becoming much more streamlined. And you see that, you know, across financial services. So I think this is a great area to venture, definitely, definitely.
Thank you very much, Paulo.
Thank you.